everyone, and welcome to our third stakeholder consultation session on the ECSRC crowdfunding project. I see a lot of familiar names, and I'm happy to see that we have persons who would have joined us from the previous sessions as well. So a very big welcome and a warm welcome to everyone this morning. Before we get into the presentations for today, I will provide, well, before I go on, let me introduce myself. I know most persons on here would know who I am. I am Alusha Faisal, the CEO of the ECSRC Secretariat. Before we get into the presentations for today, I will provide some background and context for what we intend to do today during the session. For most of you, some of you will already know some of this information, but just for everybody's benefit, I will, provide that background information or details on, why the project, about the project, as well as why we're doing this as a commission. On the 19th of October 2001, a formal regional securities market for the ECCU was launched. The market is governed by common securities legislation, which has been passed in each of the 8 member countries in the sub-region of the ECCU, Eastern Caribbean Currency Union. That date also marked the birth of the Eastern Caribbean Securities Regulatory Commission, which is a regional regulatory body charged with ensuring compliance with the securities legislation so as to protect investors in securities. The launch of the market was the achievement of another important milestone in the sub-region's capital market project. The Eastern Caribbean Securities Market, ECSM, is expected to contribute to the economic development of the sub-region as it has the capacity to provide the users of capital with an alternate, lower-cost source of funding and the owners of capital with more opportunities to manage wealth. Permit me to borrow a few lines from the ECSRC chairman, His Excellency Arthur Thomas, in his speech at the ceremony to mark the 20th anniversary of the establishment of the ECSM delivered on 19th October 2021. And in that speech, he quoted from the late governor of the ECCB, Sir Kate White-Venner, who almost 20 years earlier, or more than 20 years earlier, at the start of the ECSM stated, and I quote, "The establishment of the Eastern Caribbean Securities Exchange will go down in our history as one of those fundamental shifts in social and economic arrangements that are defined in terms of the before and the after. This institution will have an impact on our laws, on our enterprises, on how these enterprises will be financed, and who will own our enterprises. It will have an impact on the distribution of incomes and on the relationship between workers and employers. It will have an impact on and will be impacted upon by the air transportation and telecommunications industries." What is clear from this statement is that the advent of the ECSM was meant to usher in a new economic era, ripe with opportunities and possibilities for the countries and the people of the ECCU region. The hope was that the ECSC and the ECSM would serve as an opening to greater participation and inclusiveness in our economic systems, both within each member country and across the currency union. As more persons become involved in owning shares and other types of securities, they would feel that they have a greater stake in our economies and societies. Companies, too, are now afforded another avenue for raising capital to expand their operations. Consistent with this vision, and in recognition of the challenges faced by micro, small, and medium-sized enterprises, MSMEs, in accessing finance and the positive impact that these entities can have in promoting the economic development of our countries and the region, the ECSRC, as part of its market development mandate, is seeking to create an environment that would offer MSMEs the option of raising capital on the ECSM as an alternative to traditional financing. Therefore, with funding from the Caribbean Development Bank through its Caribbean Technological Consultancy Services, CTCS, the ECSRC is working on a project to implement a regulatory framework to promote crowdfunding in the ECSM. The main objectives of the project are to enhance the regulatory framework for non-traditional sources of finance for ECCU member countries, and also, as I indicated, to increase access to finance for MSMEs by facilitating the development of an equity crowdfunding platform in the ECCU. The project consists of 3 components, and I will just deal with those in summary because they will be touched on as well in the presentation. The first, and which is what we're doing here today, is validation of the draft crowdfunding policy framework, which has been developed by the ECSRC with assistance from the technical consultants. The stakeholder consultations, which you are now involved in today as part of this project, involves a review of the draft crowdfunding rules that have been developed, and we want to receive feedback on these draft rules to improve and enhance them. And following that, we will revise the rules based on your feedback. At the end of the day, what will be our aim or objective is to have a document or a framework that is workable for both the ECSRC as well as the investors and those entrepreneurs who will be participating. The second component is the sensitization of crowdfunding stakeholders, and this will involve a number of training and sensitization sessions to educate entrepreneurs, investors, investment advisors, and other key groups about equity crowdfunding and equity investment. The goal is to build interest in and demand for equity funding and support for crowdfunding in the ECCU member countries. And the phase 3 of the project involves the testing of crowdfunding platforms through an ECSRC regulatory sandbox. We believe that product testing will assist the ECSRC to better understand the operations of the platform and the type of processes and procedures that might be needed to implemented in order to protect investors and promote and maintain the integrity of the market. Fundamentally, from the ECSRC's perspective, the success of this project would be demonstrated in an increase in financial literacy and knowledge of the operations of the capital markets among the general populace in the ECCU member countries. And it is hoped that this would spur interest in and participation on the ECSM, not just by individual investors, but also persons from the region who live in the diaspora, and also, of course, by MSMEs that have been developed to a stage where they can, at some point, list their shares on the ECSM. At this time, I take the opportunity to thank our consultants, the CDB, as well as our consultants, our 3 consultants, Dr. Winsome Leslie of Dev Solutions Consulting, Mr. Thomas Ward, and Matthew Render of Mosaic, a digital marketing agency operating in St. Lucia, who have demonstrated an unwavering commitment in working with us on this project when we started about 3 or 4 months ago. Mr. Render has worked hard behind the scenes to assist with the marketing and awareness raising, and you would have received, of course, seen a lot of social media postings on our social media pages, as well as the mini website created for this project. Dr. Leslie has also been working hard and assisting us with awareness raising and training, and will be involved in the training for the persons identified under component 2 of the project. And Mr. Tom Ward has also been working tirelessly with us. He's the technical advisor on the project, and both Mr. Ward and Dr. Leslie, sorry, will be our presenters today, and they will also be taking your questions and receiving your comments on the rules. So just a brief background for our presenters. Dr. Winsome Leslie is an international development specialist and a certified business advisor with over 2 decades of experience in MSME development. She is currently president and CEO of Dev Solutions Consulting. The firm provides advisory, training, and project development services in entrepreneurship and MSME development to business intermediaries in the US and frontier markets, with a focus on access to finance. Tom Ward is a technical consultant on our project, He spent over 12 years at the UK's Financial Conduct Authority, leading on the implementation of many policy initiatives, including the UK's implementation of MiFID II and evaluating the UK's approach to crowdfunding. Most recently, he established and led the FCA's Regulatory Sandbox Initiative, seeking to encourage responsible innovation in financial services. He has also worked for the University of Cambridge's Centre for Alternative Finance, working with and advising policymakers and regulators around the world on regulatory approaches to new and emerging business models and technologies, as well as initiatives promoting financial innovation. So it is my pleasure to welcome you to the third and in our series of stakeholder consultations on the draft ECSRC rules for crowdfunding, and we look forward to your full participation. Thank you, and I now turn over to Dr. Leslie, who will do the first presentation. Thank you.
Thank you so much, Alusha, and it's really a pleasure to be here once again and to see so many folks in this meeting. It's a sign that there's a lot of interest in crowdfunding. I'm going to now share my screen. We're going to talk a little bit about what is crowdfunding, the kinds of crowdfunding, and the advantages and risks to set the table for the substantive discussion that's to take place later on the rules themselves. So what exactly is crowdfunding? Perhaps many of you might have heard about Kickstarter, GoFundMe, and other kinds of platforms that are popular here in the States. But this is a relatively new concept here in the Caribbean. There are only one, I think, platform in the Bahamas and an initiative or two in Jamaica, the primary one being led by the stock exchange. There's a social exchange, which combines donations with equity crowdfunding, which will happen later on. So crowdfunding broadly is raising money for a business or for a project, in the case of an individual, from the general public within a regulated environment using an intermediary, in this case, an online platform. And there are really four main kinds of crowdfunding. The first I mentioned briefly previously, it's a donation where individuals are donating usually to an NGO or an individual for school fees or emergencies and so on. A second type is reward crowdfunding, where, say, a startup or an individual who has a project idea might want funding to develop that idea. So in exchange for the funding that they receive from the public, they offer a reward, either a first version of the product or a free service. Next, we have two different types of crowdfunding that are more, that involve some element of risk, if you will. The first is debt crowdfunding, and there are two types: peer-to-peer lending, which is between individuals, or peer-to-business lending. And here, individuals are offering a small loan in exchange for repayment with interest. And what's interesting here to note is that the advantage for securing money through this means is that your interest rate is much lower than you would be getting from a commercial bank. And then finally, we get to equity crowdfunding, which is the focus of this project, which is funding provided to a business, usually in return for stocks or shares or ownership in the company. I just wanted to focus here a little bit on the crowdfunding process, just to review. Funds are pledged from the public via a crowdfunding platform to businesses. The businesses themselves have to present a campaign or upload a campaign on the platform. This will involve preparing an offering document, a video. The document would include financials, projections, usually in terms of looking at where you are now in terms of development and where you want to go, the amount of money you're looking to raise, and what the money is going to be used for. And of course, as I mentioned, in return for those pledges of funds, the companies commit to providing either a reward, a loan repayment, or shares. Now, I wanted to talk specifically about equity crowdfunding and highlight some of the key players in the ecosystem. Each of these players is vital to the working of the program, and also they each have their own individual role to play. First, let's talk about the regulator, which in this case would be the ECSRC, which sets the table, so to speak, sets the framework and the rules governing how a platform or several platforms will operate, in this case in the ECCU. Then we have the entrepreneurs who will be interested in raising funds and will be preparing campaigns to list on the platform. Then we have investors who will be looking at these companies and deciding on which companies they'd like to invest in and under what circumstances. Then we have the investment brokers, advisors. Many of you are here today, I think, and you will be working with investors to provide guidance around the investment, how much to invest, etc. And then, of course, we have the platforms themselves, which will have their own rules in terms of how entrepreneurs and investors will interact on their platform, the fees involved, the reporting requirements, and so forth. Let's just jump quickly to advantages. From the point of view of the entrepreneur, it's a faster way to raise investment capital. It's less complicated than conventional equity investing, where you are only exposed to a very small number of investors, even though the investors might be offering larger sums of money. This gives you a broad exposure, given the fact that it's online, and also to not only a larger number of investors, but potentially many aggregate group amount of money that could be raised. In other words, the investors are each giving you small amounts, but you're having a much larger exposure to the public. Obviously, this will give your company greater visibility across the board. So they are spin-off effects, if you will, in terms of additional clients and additional business, obviously. And then certainly in the case of early stage companies and startups who are testing products through this mechanism, it can help you to build a loyal cadre of customers going out into the future. Just going on a little bit more about advantages from the entrepreneur standpoint. As I mentioned previously, this is good for startups and folks with new ideas because you can test the ideas by providing not only shares in the company, but you could also provide a reward as well for the funding. From the point of view of the investor, it creates a diversified portfolio for you, and it also enables investors that are not accredited to invest. Usually with angel investing and with venture capital investing, only accredited investors with a certain revenue or a certain income level rather can invest. So this basically democratizes the investment process on the part of the investor, and it also broadens the scope and adds another financing instrument for businesses as well. But of course, there are risks, like most things in life. And so let's just review quickly some of those risks. For the business person, there's a need to do some work around raising funds on the platform. So it's not a question of just posting your offering document and hoping for the best. You really have to do a bit of work to mobilize interest in your campaign. Because of this, it could involve a considerable amount of time and effort to put this together, depending on how ready you are with your financials and other things to put this offering document together. It's important to note also that the funds are not transferred if you don't meet your target. So you have to be very mindful of your target amount to make it realistic so that you increase your odds of actually raising your target. There are reasons why platforms have rules around not transferring funds if the targets are not met. simply because in your offering document, entrepreneurs have to basically state what the money is going to be used for. So it stands to reason, if you don't raise the required amount of money, then you can't execute those activities that you said you would. So this doesn't give a level of comfort to investors who are putting their money in. Also, again, depending on your state of readiness as a business, this could be expensive to mount a campaign, given the preparation involved. You might have to use an accountant, a lawyer, investment broker, etc. And then the platforms themselves will levy fees for you to be listed. So that has to be borne in mind. And of course, the platforms set their own fees. So certainly in the US where I sit, companies tend to shop around among different platforms to see what suits them best in terms of fees and other benefits. In terms of the investor, again, this is a risk, like most in equity investments. There's a chance of losing your money, so you have to go into this process with eyes wide open. Because in this case, unlike angel investing, there are many funders to any company. The individual investor won't have any control over the investing company. Usually in angel investing, in the process of negotiation, because of the amount of funds and the percentage of ownership in the company, an angel investor could negotiate a seat on the company board, which would give them direct access and to some extent control over how that company is run. This is not the case with equity crowdfunding, because individual investors have very few shares and by extension, a very tiny percentage ownership in the company. And then of course, you have to be prepared as an investor to keep your money with this company for a number of years. This is not a speculative play. This is a commitment to walk with this company along their growth path. So we're talking 5 to 7 years on average, you leave your money there. And then finally, there's a risk for the investor of dilution of shares, meaning the value of the shares will be less if the company successfully moves on to an angel investment, for example, where those new investors will negotiate a certain percentage in exchange for that funding. And so there's a real risk that the crowdfunding investors would see their shares valued much less. Let me turn very quickly now to the project. Alicia mentioned the objectives and the components, but I just wanted to say that this project, in its general objective by promoting the development of the capital markets in the region, is squarely in line with the broad goals of all the governments in the region about promoting MSME development and also increasing access to finance for MSMEs by providing a new financing instrument to supplement the conventional methods, grants and commercial bank loans. The key elements, again, I just wanted to touch on them briefly. The validation of the crowdfunding rules is particularly important because certainly in the previous discussions we've had earlier this week, one of the issues that has come to the fore, which we knew anyway, but has been validated, is the fact that the rules have to be rigorous enough to build confidence in the instrument, but they can't be so onerous that it's a turnoff and a discouragement for both investors and entrepreneurs to participate. So this validation process is key, and we look forward to your comments and questions later. In terms of the sensitization and training piece, I'll be working on that. And it's hoped that out of these stakeholder consultations, we'll have a fair amount of interest in more in-depth training about the process. I think it's important not only for awareness raising more generally across the region, so there's a broad understanding of crowdfunding and what it means and the possibilities as well as the risks, but also in order to engage effectively on the platform, key stakeholders will need to understand very clearly how the process is operationalized and how they can participate and what are some of the issues that they need to consider. And then finally, the testing process is also key because it's going to allow companies who are interested in developing platforms to test their prototypes in a safe environment, bearing in mind the rules that are being designed. So it's really a good way of refining the rules again. It's like a second step beyond these discussions we're having to really make sure that the rules are really appropriate for the region and will stimulate rather than hamper the development of crowdfunding. With that, I'm going to turn over to my colleague Tom, who is going to talk a bit about the draft rules, give highlights, and then perhaps zero in on issues in the rules that will relate directly to investment advisors and investors. Thank you so much.
Thanks very much, Dr. Leslie, for that. Thanks very much for all of you joining this session. It's a pleasure to virtually meet you all, and really keen to get your feedback and your input in terms of what we've designed here. So what I want to do is just provide a quick summary of the rules, and then hopefully have a discussion about what we've been saying. So in summary, we've developed these rules to provide a regulatory framework for crowdfunding to take place in the ECCU. As Dr. Leslie says, providing what we hope are proportionate requirements and responsibilities for equity crowdfunding platforms themselves, and also for companies looking to raise capital through them. But while also being mindful and putting in place what we hope are appropriate investor protections to ensure that both retail customers and investment professionals who are looking to invest fully understand the risks and can make appropriate decisions around the opportunities they may want to invest in. If you wouldn't mind going to the next slide, please, Dr. Leslie, thank you. So just to provide an overview of the key elements, I'll go into detail a little bit later, but the first of which is that we're looking to introduce a new regulated activity to allow crowdfunding intermediaries to become authorized by the Commission to launch online portals to facilitate these equity crowdfunding transactions. So bringing portals effectively to bring together the entrepreneurs and the businesses who are seeking investment with investors who may be looking to invest in them. And so the idea would be that potential investors will register with the portal, open accounts with the intermediary, and to allow them to review investment opportunities available and to make investments in return for equity in the issuer's business. And as you may expect, we propose that the authorization of these platforms will be dependent on fulfilling certain standards. So we'll expect that intermediaries fulfill certain legal requirements, such as compliance with anti-money laundering law, have a certain amount of capital in place, and have appropriate cybersecurity and business continuity plans, and meet various conduct of business standards, as you might expect. The equity crowdfunding transactions themselves will, provided the certain conditions are met, be provided with an exemption from the normal securities law that govern the issuance of listed securities, and effectively will be considered private placements. We recognize that the full suite of securities laws can be burdensome and create undue barriers for early stage companies who are seeking equity investment in their business. So the proposal is to disapply them and to create a bespoke set of requirements to govern these transactions. But we also propose to introduce various safeguards to ensure that investors are protected. So, for example, to ensure that investors fully understand the potential risks and benefits of a particular investment opportunity, and to ensure that retail investors don't have inappropriate exposure to the risks of equity crowdfunding. And finally, we also, as Alicia and Dr. Leslie have said, we also propose to introduce a regulatory sandbox to allow prospective platforms to test their portal with real consumers in the live market in a controlled way. This will hopefully do two things. It'll hopefully support platforms come to market more quickly, and also allow the Commission to understand how the rules operate in practice and whether any modifications need to be made as a result, as Dr. Leslie says, is sort of the second stage of refining what we're proposing here. So, as I say, the rules have sought to be proportionate and to create a regulatory environment that is attractive and not off-putting to early stage companies looking for investment. But it's designed to put in place certain obligations on issuers and portals and various safeguards for investors. So that's really where I think the feedback on, in particular, around have we got that balance right? And as Dr. Leslie has said, we've had some very interesting feedback from other stakeholder sessions so far. Dr. Leslie, if you wouldn't mind going to the next slide, please. So I just wanted to quickly break down the players in this ecosystem and talk about how the rules may impact each one. So I'll talk first about the crowdfunding platforms themselves. I'll just talk about this briefly. So as I mentioned, we expect these platforms to be authorized by the ECSRC. We expect that they can be able to demonstrate certain key standards to enable them to be authorized. So, for example, policies around conflicts of interest and mitigating fraud risk, and also have sufficient financial and human resources in order to operate. And once authorized, we expect these platforms will enable entrepreneurs to register and to promote their business and launch a campaign. So giving them the opportunity to tell a compelling story about their business and detail the specific investment opportunity to potential investors, be they members of the public or investment professionals. And this is likely to include a pitch deck and other promotional materials. We expect these platforms to have in place online community discussions and forums, so allowing actual and prospective investors to interact with each other and as well as a business looking to raise capital. The rules will permit crowdfunding intermediaries to display various investment opportunities, but in an unbiased and objective way. So allowing the prospective investors to filter and sort the opportunities that may be of interest to them. The current rules do not propose that crowdfunding portals should offer investment advice themselves. And once authorized, the rules put certain obligations on crowdfunding intermediaries to ensure prospective investors really understand the risks and the benefits of a particular opportunity, particularly the risks, as Dr. Leslie has sort of highlighted. So the rules will stipulate standard risk warnings and disclosures about the general nature of equity crowdfunding to ensure the potential investors understand the key risks. And certain standard information will be required in relation to each investment opportunity. We've tried to make this as proportional as possible, but we think it's really important that there are certain standards in place around the disclosure and what companies need to tell potential investors about themselves. So, for example, any financial statements from the issuer, the current valuation of the business, the current level of borrowing, and key information clearly about how much funding is being sought and how those funds will be used. And we also expect the platform to be to a degree a gatekeeper and to conduct a certain amount of due diligence on each potential issuer that is looking to raise funds on its platform before they're accepted. So, for example, conducting background checks to verify the business proposition of the issuer, and to conduct an assessment of the creditworthiness of the issuer, and ensure that a suitable shareholder register is maintained by the issuer. And the rules propose that the extent and the outcome of this due diligence exercise undertaken by the platform is disclosed to potential investors. Dr. Leslie, if you wouldn't mind if you wouldn't mind skipping actually a couple of slides, I might finish with investors because I think that might be particularly important to this forum. So I guess the second part of the ecosystem I just want to talk to is the obligations for entrepreneurs and businesses who are looking to raise capital. Perfect, thank you. So as we've said before, the rules primarily look to facilitate capital raising from smaller businesses, those businesses who may not yet be ready to launch on a listed market and are looking for startup or seed capital in order to grow their business. And so we expect these businesses will source investment from the crowd. And as Dr. Leslie has said, typically be a number of investors offering relatively small amounts of capital to invest in the business in return for equity. And so we'd expect certain things from a business who's looking to raise money in this way. So businesses should have a clear business operation and a clear business plan, and have a clear plan around how they're proposing to use the funds they've raised through the portal. As I mentioned earlier, the investment opportunities will be exempt from the detailed prospectus and registration requirements under the Securities Act, provided certain conditions are met. And the key one here is that the total amount of securities being offered by each individual issuer does not exceed 5 million East Caribbean dollars within a 12-month period. Clear disclosures to potential investors are clearly very important to enable them to make informed choices about what businesses to invest in. So we'd expect that each company that is looking to raise funds clearly details on the platform their most recent financial statements, their valuation of the business, current borrowing levels, and the source of borrowing. So, and we want to standardize this as far as possible so that the firms are disclosing the same types of information to allow comparability between various offerings. And we'd also expect that this all to be codified in an offering document. So this is really the key information that investors need to read and understand before they commit to making an investment. So this is things like key information about the business plan, the number of shares being offered, how these have been valued, the key risks the business has identified about itself, and as I say, how it plans to use the proceeds of the equity it's offering. Offers will not be closed until the minimum proceeds the issuer is seeking has been raised. And as Dr. Leslie says, if the target amount is not reached within the specified time frame of the offer, then the funds will need to be returned to the investors and no equity can be issued. And the issuers will be responsible for keeping a shareholder register of record ownership of shares raised via equity crowdfunding. And finally, in terms of the entrepreneurs, so the rules don't prohibit the resale of securities, but don't include detailed provisions around a secondary market. And it's hoped that some businesses that are successful in raising capital via equity crowdfunding will graduate to the ECSRC and become listed businesses and all that entails. So I just want to finally talk about what might be the key focus for today, or particular focus for today, is some of the key issues for investors. So we're looking to ensure that every type of investor has the opportunity to participate in equity crowdfunding, and that the framework that we produce provides confidence in this activity and legitimacy in order to encourage potential investors. Given the expected interest from retail investors, it's certainly the case around the world that most investment comes in small amounts from retail investors. We propose to introduce investment limits on retail investors based on their income or net worth to ensure they're not exposed to undue risk. So and I'll set these out, and I'll be particularly interested in feedback on these. So for investors with an annual income of up to 100,000 East Caribbean dollars, we're proposing that they may purchase securities up to a maximum value of 5% of this total annual income. For investors with an annual income between 100,000 and 300,000 East Caribbean dollars, they may purchase securities up to 10% of their total annual income. And then for investors with a net worth between 300,000 and 500,000 East Caribbean dollars, we propose to allow them to purchase up to 5% of their total net worth. So we're thinking here that there may be people who have maybe retired with a degree of savings, but maybe very low annual income, where we may want to allow them to invest a certain amount in these businesses. These rules also provide an important carve out. So if the intermediary, if the platform assesses that the investor fully understands the merits and risks of a particular investment, that these investment limits can be disapplied. And it will be a case of whether the retail investor themselves, or maybe an investment professional, or that they've had the advice of a broker dealer or an investment advisor, and they can demonstrate to the platform that they fully understand the risks and benefits of what they're looking to do. And for accredited investors, we're not proposing any limits on the total amount they can invest in businesses raising capital in this way. And in order to provide an appropriate degree of protection to investors, we'll ask all investors to attest and sign to a standardized questionnaire before investing, confirming they understand the risks of crowdfunding investing. And as I've mentioned before, we're looking to standardize as far as possible key investor disclosures before an investment is made. So requiring the same information for each investment opportunity to be contained in the offering document, and also provide key general information about the risks of equity investing prominently on the platform, and to standardize this language as far as possible. And finally, in terms of investor protection, the rules introduce a cooling off period where the investor can cancel a commitment for any reason up to 48 hours after the commitment has been confirmed. So that was a very whistle-stop tour, I think, through the proposed rules. As I say, we've tried to design a framework that seeks to promote this activity in a prudent way and putting in place proportionate regulatory obligations on the portals and the issuers, whilst providing what we hope are appropriate protections for investors. So with that, I'd really welcome your feedback on what Dr. Leslie and I have set out here. I guess what I'd be particularly interested in is some of the proposals around the limits of excuse me, of different the limits for investing for different types of retail investor. Are those levels, those levels seem reasonable? And also, I guess more generally, is there anything that you've heard here that could create a potential barrier for your potential participation in equity crowdfunding? Any red flags you've heard that you'd like to raise? And also any other detailed feedback, if you have reviewed the rules, that we'd be very appreciative to hear, so we could take on board. And also, obviously, any questions about what we've said. So thank you very much for listening to me, and I'll hand back to Alicia to facilitate the discussion.
Thank you very much, Tom and Winsome. As usual, you're very concise but comprehensive presentations. Today, while we would like to have you place your questions in the chat, we'd also want to have some interactive discussion. So please feel free to also use your microphones to. I know sometimes we have some questions that we may be better if we verbalize and articulate. So feel free to do so as well. So while the presentations were going on, we had some questions being placed in the chat. And the first one, it says some regulators require intermediaries to offer single services, example, exclusively equity crowdfunding. Can an existing crowdfunding platform leverage its platform to offer equity funding alongside its existing non-equity crowdfunding, or will it be required that equity crowdfunding be on a standalone basis? Tom, you want to jump in?
Can do. It's a very good question. Thank you very much. So yeah, that is a very good question. So what we're currently proposing is that you don't have to offer equity crowdfunding exclusively. So for example, if you're an existing licensed broker-dealer or an investment advisor, you can also apply for a license to become a crowdfunding intermediary. But if you do that, you just have to clearly make sure that the services you're offering are clear and that they're distinct from each other to the investor, to ensure there's no conflicts of interest, and everybody's clear about the bits of the activities you're providing. I think we typically see, so I think how we've drafted the rules are that we'd see new entrants coming into the market looking to be solely a crowdfunding intermediary. But if a crowdfunding intermediary is authorized and then it wants to become, let's say for argument's sake, an investment advisor or a broker dealer, the rules don't prohibit that, provided that, as I say, it's clear and it's abundantly clear about what types of activity you're offering in a particular part of your business.
Thanks, Tom. I assume that answers the question. Alex, if you don't mind, could I ask you to articulate your second question
Okay.
regarding yes, thanks.
No problem. Good morning, everyone. But before I go to the second question, I do recognize the conflict of interest between whether you are an investment advisor, but let's say, for example, I have an existing debt, a peer-to-peer lending platform, ensuring that yet people clear in terms of what they participate in. It's going to be okay for me to offer equity crowdfunding, yes?
Yeah, so provided you get the license from the commission to undertake it, you could theoretically do that. Yeah.
Thank you. And as it relates to the second question, when defining, okay, so what I mean by colors, can I say, for example, I need to raise, the minimum I need to raise is $450,000, for example, but I can accept up to $500,000 to be used once I put what it will be used for. Once I could disclose what it will be used for, can I have a minimum and maximum ask instead of just saying that, okay, I need a target of 500,000, and if I don't get 500,000, it's all or nothing? Okay, I see everyone looking perplexed. Okay, so take, for example, let's look at the regional government securities market. The regional government securities market, the government might say, I'm issuing 10 million, but they will accept up to $500,000 more if it's oversubscribed. That's one. So that's an example. Or take, for example, somebody might ask to say, I need optimally $500,000, but we could get most of the functionality done with 450,000. So they have a minimum, that the threshold that they need to get, as opposed to just simply saying 500,000. If we don't get it, that's it. It fails.
But Alex, hi Alex, nice to see you on the online.
Hi,
I have a question, because you see, when this is like traditional equity crowdfunding in the sense that there's a valuation for the company, right?
Right.
And you're issuing shares.
Mm-hmm.
You have in your mind, you need X amount of money for the company, which is going to represent X amount of shares that you're willing to issue for that money. So when you're posting a campaign, you're setting a target amount. You're not saying, okay, if I can take this, but the maximum I can take is that. Because then how do you value your shares? How do you decide going out the gate what percentage shareholding you're willing to give up? It's usually one target, which is realistic, meaning you calculate how much runway you'll need, say, over the next 12 to 18 months to do this activity. And then whatever you get above that is gravy. Usually you meet your target. Sometimes, in the case of places here or companies here in the US, they're oversubscribed, but you have to have, I guess, a minimum target, which is stated on the platform. You can't be giving a range, because then it complicates the whole calculation of shares, and it doesn't really give comfort to investors and other players who are seeing your issue. Do you know what I mean?
Noted. I just wanted to know if it was all or nothing.
No,
it was just a one and done. Because I do recognize that the minimum you would have done your work, your projections based on the minimum.
But you're not going to state that it's a minimum. You're going to say, this is my target. I'm offering X amount, representing X amount of shares, right? So if it's $50,000 and you have 50 people each contributing 1,000, then that represents, I don't know, let's say 5 shares, 10 shares per investor.
Okay.
Right. So it's not, I hear what you're saying, because you're trying to hedge your bets in terms of making sure you get some funding. But I think the logic is that this money, this $50,000, is going to scale and do certain activities, right? It's usually working capital that you're asking for. Okay. So you're keying this money to a certain group of activities that need to be handled with this funding. So if it's $50,000, you get 20,000. Logic states that you can't now comply and complete the activities that you said you would. So it would make sense from an investor standpoint for me to be giving you that 20,000 when I know you can't do those activities.
I agree.
You understand?
Yeah, I agree. I agree very
So
much. I was
it's
just flipping it. The premise of my question was flipping it. The target activity could be accomplished with 50. That's the minimum ask. That's the minimum ask. So the follow-up question would be, you recognize any oversubscription would be gravy. So let me put the question a different way. If you have an issue that is oversubscribed, will any businesses, entrepreneurs be allowed to take the oversubscription?
You mean the entrepreneur issuing
Yes.
the
Yes.
call?
Yes.
Yes.
So, good.
Yeah,
so then,
yes.
okay. So then, technically,
I mean, that's
we're on the same
gravy.
page.
That's gravy. I mean, you have a choice. You can do a minimum to say, okay, I'm going to be timid and I'm going to be very conservative and say, I know I need a minimum of 50,000, so I'm going to just ask for 50,000. Or you can be a little bit more riskier and say, okay, I really need 60, so I'm going to ask for 60. But the risk is that you might not get 60 and then you don't get anything.
Right.
So this is why you have to be very cognizant of your numbers and what you need realistically for this company, and then have a sense of the market as well to see what you can get. And it helps to have customers already who are willing to put money down on day one going into the platform. So once you post your issue, you've got 5, 10 customers already, or investors in this case, already putting their money down. One, it creates excitement, but also it starts the train running in terms of your ability to raise that 50,000.
Okay, we're on the same page. I think it was just the formulation. We are on the same page. Once you could take the oversubscription, we are actually on the same page.
You can, but that means you have to have a super product or service that everybody wants. And this is why when I talked earlier, I talked about doing some work to mobilize interest in your campaign beforehand, so that you have takers, early adopters, as if you will, going out the gate, right? So it creates a little bit of excitement around the thing, and it increases possibilities for your making your target.
Awesome. Thank you so much.
Okay, you're welcome.
Alex, before you go, you had one other question about the cooling off period.
Yes, I noted that investors may have a cooling off period. How does that work with the campaign? So the campaign, we have a campaign running that investors could have, that the campaign is supposed to end today at noon. So the persons who pledged today at noon, they have a cooling off period. And so therefore tomorrow the issue could be not fully subscribed again because they have a cooling off period. How does that work?
That's a good question. So you'd have to wait for the cooling off period to conclude before you close the offer.
Okay, so the campaign. Okay, so because then the question that is banding around in my head is, at what point is the auction or campaign really closed? If the last investor in still needs a cooling off period and could change his mind, then technically you could go from being subscribed or from being fully subscribed to undersubscribed.
Yeah.
Yes. So that's a kind of a nervous thing there, in that, okay, I have it. Oh no, I don't.
Yeah,
so I'm a little worried about that. I'm a little worried about that, in that investors should make up their mind first before they commit, and then pull the trigger only if they mean it.
So Alex, what would be a suitable, I think we said 48 hours. So in your view, what might be a suitable time frame? I know what you
I'm thinking that invest is either, because if an investor pull, well, again, it would mean that you would have to be targeting all issues to be oversubscribed, so that if any investor jumps out, you're good to go still. Because once you have, I believe the cooling off period should have been ahead of pulling the trigger. In other words, the bid is not the bid. The bid only becomes a bid, or the offer only becomes an offer after the investor has cooled off. So for example, he could make an issue and say, I am thinking of offering a provisional pledge. So, okay, this is what I'm thinking. And only after 2 days does that become a sound offer. And that way, when you close the campaign, you're closing the campaign based on sound offers only, rather than somebody changing their mind after the fact. So that was something I'm looking at, that I didn't like the double Dutch kind of like I'm in, I'm out kind of thing. I think he should know, he should say, okay, I am inclined to invest, and after 2 days, either pull the trigger or don't. But that amount should not be showing up as counting as the issue is subscribed or not, until that cooling off period has elapsed. So that way, when the campaign closes, the campaign is closing with committed funds only, not with somebody wanting to change their mind.
Right. I see a very interesting comment on that in the chat. It says cooling off period. Alana says cooling off period is waived for offers entered less than 48 hours before the close of the offer.
Okay, this is interesting.
Yeah.
Oh, so that's a proposal, or that's the rule?
It's, Alana, that's a proposal, right? Yes, she says yes.
Okay. So then I could wrap my head around that, because you would have to decide whether you have 2 queues, provisional queues and confirmed bids. Even from a programming standpoint, I mean, I'm looking at it from right down to the operational aspect of it, how this is going to affect both the investor and the entrepreneur. Yeah. But food for thought, food for thought.
Yes, yes. Thanks. Tom, I see you. You want to add anything? Not yet?
I think I want to think about it. I think it's a really good point that I hadn't quite thought through. I think there is probably a way we can make this cleaner, Mr. Strawn, as you've suggested, because you could see a scenario, right, where you're saying the target's been met, but actually in that last 48-hour period, somebody drops out, and therefore you've got to sort of go back into your capital raising, which doesn't feel satisfactory for anybody. So yeah, take it. This is exactly the feedback we want, and we'll try and write a rule, maybe around what Ms. Joseph is looking at as well, in terms of you waive that requirement if you're sort of a last-minute investor. But thank you. That's I'll work on it.
Thanks. Thank you.
No problem. No problem.
Thanks, Tom. Alex, you local?
Hi, morning all. I'm just following on Alex's point, because I know for most platforms, and you can correct me if I'm wrong, the investors can see whether it has been fully subscribed or oversubscribed, etc., right? So if you allow for because it may be a situation where persons see that it's already fully subscribed, and as a result, they don't, even though they may have intended to invest, they decide not to because they see it fully subscribed. But then with the cooling off period, it may not actually be fully subscribed. So that may cause an issue as well.
Excellent.
Yeah, I think that's spot on. I think we need to work through the point of which the investment commitment is made and can't be retracted, and come up with a better solution than we currently have that we've got for that. So yeah, I agree.
Thanks. Jefferson, I see your mic is open.
Yes, good morning, hello, sir. Thank you very much. Good morning to all. Let me hasten to congratulate you and your team for this effort, for this endeavor. While of course I have my peace and disappointment with what the market is, I think this enterprise that you guys are on is long overdue. In fact, by way of some background, in a previous life, almost a decade ago, after touring the diaspora, we attempted to develop a product where solutions over there were interested in developing, well, a product where they can develop, where they can invest in enterprises in St. Lucia. And we had a working group established to examine the possibilities. The challenge that we were having was finding an effective and efficient means of transferring funds, given all of the issues of AML and so on. In fact, we had discussions with Western Union, and in the end, the matter failed. So that's background. And I think it's important that we find the resources wherever they are to help our SMEs across the ECCU. We have not realized the full potential of the market. And as one of the pioneers, I said I've expressed my disappointment in that regard. We have ceded ground as one of the more sophisticated, I would say, to Jamaica now, that is leading the way in capital market activity in the region. But that's history now. I think we have good ground moving forward. My concern is, and I think one of the decks, one of the slides that came up, the issue of AML. How do we deal with that risk to ensure that persons out there would have a safe way of getting those funds, efficient of getting those funds across to the investors, given all the issues, of course, in the region now with the risking. The banks are very risk averse in accepting funds, given all of the AML provisions to try to meet the requirements of the corresponding banking relations. So that's one issue that I would like to raise and get some more clarity. So what is the AML regime that will be in place to deal with that issue? Secondly, operating in the diaspora where I am now, in Canada, and wanting to get into the market by way of facilitating that kind of transfer, that kind of crowdfunding. What is the requirement for physical infrastructure on the ground? Given all what we know now of COVID and virtual working, so to speak, virtual enterprises, what is the requirement in terms of having a physical presence in the ECCU to facilitate that kind of crowdfunding? And will the regulations actually consider those issues going forward? Thank you.
Thank you, Mr. Swanson. Very good observations, and for giving us that little historical background.
Yeah.
Yes. If I may take the last question first. There is no requirement for physical presence. Everything is virtual. It's a platform. It's being done via the World Wide Web. So the rules, and Tom, you can correct me here, does not contemplate the requirement for the platform or the entity involved in crowdfunding to have a physical presence. However, what we're saying is that you should have certain basic operational structures in place. For example, not structures, maybe structures is not the right word. You know, you should have a team of persons who are, you know, assisting with the operations. Might be you and just one other person, but you know, all of these things we will iron out through the sandbox. So by product testing, it would give us the opportunity, the commission, to really see what you are proposing as a crowdfunding intermediary, and then we can determine and work with you to make sure that, you know, whatever you are, how your operations are established or being set up is going to work for us from both for both you and the regulator.
Thank you.
So we're talking flexibility here.
That is great.
And as you
That's
say,
encouraging.
we're looking at you know, flexibility, and you know, it's about market development at this point. In terms of the AML CFT regime, we're hoping that persons can can and would be in a position to use digital payments. And we also have the ECCB now developing the DXCD. So that is an excellent opportunity for persons to be able to use to do their transfers through the DXCD platform that is available. However, in terms of the AML CFT regime, I think the rules have some basic requirements that the intermediaries must have in place. Tom, I don't know if you want to add something extra to that.
Yeah, yeah. So the rules specify that the intermediary needs to be able to comply with all existing AML CFT requirements, and also expects the intermediary to conduct due diligence on prospective issuers to ensure that they can satisfy AML requirements before they accept them onto the platform.
All right.
How they do that, sorry, Alicia,
go ahead.
I was just going to add how they do that is up to them effectively. The rules don't go further than that, but there's a clear expectation on those two aspects that the platform needs to comply with existing AML law.
Right. And we also said yesterday that ECSRC is not a regulator for AML CFT. And so we would necessarily have to engage with the regulators, the AML CFT regulators, on this particular aspect to make sure that whatever however it's being implemented through the platforms, that is satisfactory for the country's regulators, AML CFT regulators.
Excellent. Okay, thank you very much. I'll listen further.
Thanks for your input. We have Mr. Alvin Thomas.
Yes, thank you. Good morning. And
morning.
like the previous call, let me congratulate the presenters so far for what has been presented. I'm in Atlanta myself. I'm a citizen of Dominica, but I reside in Atlanta in the US. And like the previous caller, I know during the presentation, I believe if it's Dr. Leslie or yourself mentioned the role or the involvement of the diaspora. And as I'm sure most of us on this call, those of us who are outside of the region will recognize the significant role that the diaspora plays in terms of our involvement and even investment in the region. I mean, not just recently, I believe I read somewhere where there was, in terms of remittances, well over 500 million US, if not more than that, was remitted to the region. So it's a huge amount of monies that is remitted to the region on an annual basis from the diaspora. So my question is, how does the ECCB or the EC, this guy, how do you intend to really get that across to the diaspora that they can see the need to take advantage of that investment to help those small businesses, which I'm sure many of us would like to. There are various Caribbean organizations throughout the US and North America. And I know you mentioned the levels of the individual investment, 100,000, 5%, and that sort of thing. But say, for example, myself and my wife might want to jointly say, okay, yeah, that's a great thing. We want to put, 150,000 US dollars into that, or whatever the case might be. What mechanism? I'm not sure I pretty much get that yet, because this is a tremendous opportunity to tap into. I'm telling you, a tremendous opportunity. And also the question of the regulatory framework, how does that work with, because as a US citizen, any investment I make personally outside of the US, I have to report for my tax purposes. So any investment I invest into, I have to report it for tax purposes. So is there any way the ECCB could work with the regulators in North America and say, well, hey, this is an investment to support small business or development, or can you waive? You know, I'm just kind of talking aloud. These are some of the issues I see coming up. So I'm gonna keep quiet for a little while. But thank you.
Thank you very much, Mr. Thomas, and on behalf of the team, thank you very much for your commendations. I will let Dr. Leslie, since she's familiar with the U.S. Tax regime, but I think what you've raised there is a critical point, a critical issue, and we hadn't quite looked at it before. So thank you for bringing it to the fore, and we will we've noted that, and we will look into that a little more. I'm not making any promises because we cannot interfere, or we have no sway, as I would say, or no influence on the country in relation to its taxes and how it implements those tax laws. So I certainly, from the ECSRC standpoint, I and the ECCB to some extent, I can't say that I'll speak for ECCB, but I don't think when it comes to that we would have any sort of influence per se. But I'm saying that this is something that we can look into. So that's one. You had an earlier question. You said, oh, I think I remember, with how we would get the information to persons in the diaspora. We had a similar question yesterday, and the suggestion was that we have sessions or we have these kinds of similar sessions held during the evenings for persons in the diaspora, or we distribute the information or have sessions through the Ministry of Foreign Affairs, so that we can, present something similar to persons, give them the opportunity, persons in the diaspora, to address, to get information on what we're doing. So that is something that we have taken on, and we will be looking at how best we can approach doing that in the coming months.
Aloza, if you may allow me, please, just to respond to
certainly.
Question. Regarding the marketing and communication, I believe in almost every location in the diaspora, you've got consulates and embassies, and you've got associations of various nationals. I believe that may be a good vehicle to use in that marketing and promotion exercise. I think the various associations, the Lucia Association, Dominica Association, wherever they are, they will welcome the opportunity to reach out to their populations in whatever location to assist in the promotion.
Yes.
Regarding the issue of tax, in fact, when we started looking at what I mentioned earlier in my earlier submission, that was a consideration as well. And we thought perhaps we should have asked our Ministry of Finance through the diplomatic channels to see whether they can get friendly governments like Canada or the USA to treat investments in those as a tax exemption. I believe it is being done for Israel.
Okay.
In terms of all the bonds that are issued in the US to assist Israel in becoming what it has become. I believe they're tax exempt. So you can probably do the research and to see whether we can, through our diplomatic channels, get those investments to be tax exempt.
Right, and thanks for saying that. We have a meeting with the OECS Secretariat sometime in October. So I think this is an area or an issue that we can raise with them, as well as the ECCB. So in our discussions with this secretariat, we can probably raise that as an issue to see whether they could provide any sort of support, given that the their position within the ECCU, the OECS, sorry.
Yeah, and they can look at it as a development assistance.
Yeah. Thanks. Thank you. Go ahead,
if I could just weigh something in here. There are certainly cross-border issues around investment. Many countries, including a few in the Caribbean, I'm thinking of Jamaica in particular, have double taxation treaties with the US. So that certainly, I'm not sure what the situation is with the ECCU countries, but certainly, you know, in other words, you're paying taxation on something in the States as a US/Jamaican citizen, you can't be taxed in Jamaica and vice versa. So there are adjustments made in your tax return. The laws, I think, certainly in Jamaica, Trinidad, and so on, don't prohibit companies from raising funds via crowdfunding wherever. But I think the taxation thing is certainly something we should raise at the regional level to see to what extent there are already provisions in place, or if not, if there's something can be negotiated, as you said, in the context of a development assistance play, because I do know the US is committed, particularly as a result of COVID, to assisting MSC development in the region. So perhaps this could be on the table as an item to be considered.
That's right.
Right.
In fact, CARICOM does have a double taxation agreement with Canada, I believe, and I'm not sure about the US. So even that could be leveraged as well.
Thank you. Thanks so much for raising that issue.
Excellent.
Yep.
Thanks.
Yep. Okay, Omar. And then we have I think, a comment and a question in the chat. Yeah.
Okay, morning, everybody. I'd just like to put the sentiments of those who've gone before to applaud the initiative. I think the effort to marry innovation and capital in our region is long overdue, and this sort of creates a good avenue. I don't know if I missed it in the presentation. A couple of my questions may have been covered, so forgive me if they were. My understanding of crowdfunding is that it benefits more informal companies, smaller entrepreneurs, but I do know that there is a desire to ensure that there's a solid regulatory framework. And one of the things Tom mentioned in his presentation was the issue of valuations on companies and the expectation that they will manage their registers as well. So I was wondering, Alusha, if there any consideration might be given to an agency that would provide those services at a reduced cost, as opposed to, say, having to go to one of the big four for evaluation. As you know, those are costly. You then moving outside the realm of a crowdfunding sort of proposition and into an actual IPO and EPO with respect to those kinds of costs. So just in terms of valuations, managing the register, handling those sort of things, would that be considered? So just from a practicality standpoint and from a not regulatory per se, but from a mechanical standpoint, what could be put in place? Additionally, I'm not too sure if I misheard Tom. I didn't miss him. I just didn't hear him properly because it started raining pretty heavily. On the issue of eligibility, based on what I heard, I find it a little restrictive. I mean, central in crowdfunding is the word crowd, and you want to ensure that you cast as wide a net as possible to capture as many investors as possible. So I don't know if some thought could be given into that. I personally found it a little restrictive, just in terms of the requirements to participate. We do have a number of investors in our region who want to invest, but they may not meet that criteria. And if you invest such a small amount, or if you invest in a small amount, it's not necessarily that much of a risk proposition. So it's just something that I wanted to bring out. So thanks.
Thanks, Omar. Excellent points. On the issue of the Agency for Business Services, thanks for raising that, because we had a similar discussion yesterday. And I think coming out of that discussion, one of the things that we're looking at possibly doing is, as part of the ongoing training, and Dr. Leslie can back me up here as well, part of the ongoing training is to target certain professions like the accountants, the lawyers who would be providing or required to, who will be required to provide supporting services to the small businesses, and perhaps we do have persons in the region who have set up their own accounting firms, for example, who can or would be willing to sort of specialize in providing these kinds of services. So we are looking at, you know, finding those persons. I think I have 2 persons already in my head, and finding them and sort of getting a group of persons on board that we can provide what Dr. Leslie says, you know, like a train-the-trainer program for, you know, to provide the kind of services that the SMEs would need. And then, you know, we would have, the good thing is that we have an integrated market. So you could be in St. Kitts and offering services to persons in St. Lucia or St. Vincent. So, you know, we are looking at that. And one of the things, as I indicated, is to find those persons and sort of really get them into, you know, well trained and so that they can provide those services in a competitive way. Dr. Leslie, you want to add anything? You're muted.
Yeah, no, I was just going to zero in on the issue of valuation because, as you probably know, it's not an exact science, but there are established methods of valuating or valuing rather established companies, so using discounted cash flows and so on. There is one person I know in Trinidad who does valuation, but when it comes to early stage companies, this is what we're looking at here. It's a little trickier, but I certainly believe that we could, and I take the point that there needs to be perhaps a central entity that could provide these services at a discounted rate based on volume across, you know, many different companies, because it's something that we need in the region and certainly something that would be valuable as opposed to each company trying to do its own thing in this regard. So I think I take your point about centralizing the process, and certainly this could be part of the suite of services offered by an entity which would provide accounting, legal, etc., to support this effort.
Thank you. Thanks, Dr. Leslie. In terms of the eligibility requirements, what we were trying to accomplish is, you know, some level of, you know, having the right protection, the right level of protection, you know, for persons in the market. Because as you know, the ECSRC's mandate is to protect investors. So I don't know, Tom, if you want to add anything in relation to that.
Yeah, thank you. And I think it comes to the other gentleman's point, Mr. Thomas's point as well from earlier. So in terms of broadly eligibility, this is open for all types of investors. So your general retail up to accredited. So in terms of who can invest, it's open to the widest possible number of potential investors. There's no sort of restrictions on that. The restrictions we're putting in, or we're proposing to put in, are around, you know, limiting people with maybe more modest incomes can only invest a small amount, and recognizing it is, you know, it's quite a small amount. There is provision in the rules that these limits can be disapplied if the intermediary can determine that a retail investor fully understands what they're getting into and fully understands the risks and makes that individual assessment. It will be up to the intermediary to determine that and to put in place a process to assess suitability, I guess, in its general sense. So there is provision for those to be disapplied. But you know, if a feeling is that actually these limits are too restrictive, it's useful feedback for us to sort of think about. I mean, I looking at different jurisdictions across the world, they generally do put limits in investment limits in place for retail investors, and typically they're probably not as progressive as ours in terms of you're allowed to invest more if you have more income or more net worth. Typically they're around sort of 10% of your your annual income. But if there's a feeling that this is too restrictive, we could definitely look at it. And it's obviously exactly the feedback we want to be getting, because we obviously want to make sure that we need to get that balance right, I guess. And I think by having a provision in place in the rules that says these can be disapplied if you can prove to the intermediary that you really understand what you're doing. I think that's one way of doing it, but if we need to look at the actual percentages again, we should do that.
Thanks, Tom. We have 2 questions in the chat. The first one is the offer subject to an allotment process? Tom?
The answer, I think the short answer is no. So typically, if as we tried to explain earlier, if the offer is oversubscribed, that is permitted, and provided that the issuer is comfortable with it being oversubscribed and issuing further equity to investors, they would just be allocated in the normal way. It wouldn't be subject to any allotment process, I don't think. I think we're trying to make this quite simple, and I appreciate allotment processes can be quite complex in terms of how they work for IPOs. So I think the short answer to your question is no. But if there's follow-ups, please let me know, or concerns about the fact there may not be, let me know.
Okay, and I think maybe a related question is just to be sure, if using equity financing and the target amount is not met, are potential investors refunded?
Yes.
Yes.
Yeah, and it's the obligation of the intermediary to ensure that happens within 5 days of a target amount not being met, that all investors will be refunded in that scenario.
Right. Creamoy, you had a question in there as part of the earlier discussion. Is that the same rule applied to debt financing? I'm not sure. If we would have addressed that one. Is it a comment or a question? Oh, he says he doesn't have a mic. Okay, there are no more hands. Okay, he said it was related to Alex's submission. He was asking whether the rule relating to the Alex, the tiered allotments.
Yes,
right,
yes.
Alex?
So yeah. So to the extent like the regional government security, it works the same way if that's what he's asking. Based on what Dr. Winsome would have indicated, yes, the entrepreneur has the option to take up the oversubscription. Yes.
Okay, thank you. And Mr. Thomas again?
Yeah, just a very quick question, actually. I take it, of course, that there was a need, based on what survey you guys did, ECCB, that these small, medium-sized businesses need that kind of capital that is not available locally for them, hence the reason for moving in that direction to assist the small businesses. Any specific industry area that, based on the need assessment that was done, was it this small businesses in tourism, technology? I'm just kind of curious, what specific areas? I know it's small, it could be startups and new businesses coming out, and these businesses are unable to get the kind of funding locally, hence the reason why we're moving in that direction. So are there any specific industry that came to mind, any areas? So I'm not sure if did you kind of get where I'm heading to?
Yes, thanks. And this whole project stemmed from a report that was done by the World Bank IADB, on crowdfunding, the potential for crowdfunding in the Eastern Caribbean. And in that study, they used, they would have focused, I should say, focused on a number of countries in the region, including St. Lucia, which is one of our ECCU member states. So I think the study was conducted on Jamaica, Trinidad, Barbados, and St. Lucia. And based on that study, as well as feedback that the Commission would have received during the COVID-19 pandemic about the challenges that some of the small businesses operating in our region were experiencing or facing at the time, we decided to come up with a sort of a supportive framework that would allow the capital markets to be used to support those types of entities. The study did not focus particularly on any specific type of business, but I do recall there was some emphasis on high growth companies, technology companies run by women in the region. So I don't have the specifics right now in front of me, but I think that study is available online if you are willing to look at it. In terms of whether we would be targeting or which businesses we would target, I think at the end of the day, it's really open. It is open to any business that would qualify and can meet the requirements. And of course, I'm open to any other comments Tom or Winsome you may have.
Thank you. Can you post out the title of that study if in the chat, and I could just, or if you
we can share. I could share with you after the meeting.
Okay, excellent. Thank you.
Yeah, you're welcome.
Just to say, if I might add, that equity crowdfunding, in this case for the ECCU, we're seeing it as a way of stimulating and encouraging the growth of innovation and innovative companies in the region. As you know, green industries, green companies, for example, have a challenge in getting conventional financing from a bank, let's say. And so this is a way of, someone mentioned earlier, one of the participants, I think, mentioned about lauding this project as a way of really fast-tracking innovation in the region. And so we're seeing it that way. So as Alicia said, we're not looking at any particular industry, but we're looking more at stimulating innovation across the board in any industry, to sort of help to bring the ECCU on par with counterpart companies, in Central America, for example.
I just want to say, Alicia, that I fully support your endeavors. And if there's anything I can do from where I am here in Toronto, feel free to get back to me and we can see how I can support you in that endeavor.
Okay, so I think in terms of our marketing in Canada, we can thank you very much for the offer, and of course we will be contacting you. Definitely.
You're welcome.
Yes. We have another question in the chat. Will the draft framework be available to the public or to individuals in the meeting? Yes, we will have the draft rules were circulated with the invitation for the meeting. It's available online. If you check the email you would have received with the link to join, it does have the link to the documents, and if not, it is available via the ECSRC crowdfunding website. So it is available to the public. Can an issuer structure a campaign in a way to manage investor controlling interest? Interesting question.
I'll have a go. It's a
Okay,
good question.
Nice, Tom. Nice.
So yes, the rules are pretty high level and hopefully flexible in terms of the type So for example, any rights associated with the share, any interests. So yes, provided it's clearly disclosed to the investor, a business could manage in terms of the rights that accompany a particular share. So yes, they could. We've left it quite flexible in the rules.
Thanks, Tom. Alana, I'll assume that answers your question. Okay, she says yes. Okay, we have another question. Would collaboration between the Eastern Caribbean Partial Credit Guarantee and entities seeking to use debt financing be possible and available? And I can answer that one. Yes, the ECSRC is looking at collaborating with and partnering with our regional entities, including the ECSC. We've met with the ECSC already. We will be meeting with OECS and of course ECCB as well. And we are looking to schedule a meeting with the ECPCGC to see how we can collaborate on this venture. So definitely it's going to be we're looking at creating a team effort with all the resources that we have available in the region to try to implement this program successfully. Another question, what are the post-monitoring requirements of the issuer to ensure fair treatment of the investor thereafter, assuming a less structured framework to a listed company? What are the post-monitoring requirements of the issuer to ensure fair treatment of the investor?
So it's another good question. We haven't stipulated any specifics in terms of the post-investment treatment. You know, there are obligations that we've put on the intermediary to ensure that things like, for example, a shareholder register is maintained by the issuer. But in terms of the specifics, you know, 2 years, 5 years, 7 years down the line, we haven't put any obligations on the intermediary to sort of oversee that relationship post-issuance. It is a very interesting point. I guess we need to think carefully about the burden on we may be putting on the intermediary to do that. But I think there's probably something there we probably need to think about, Alicia.
Yes. Yes, we do have some disclosures that would be required in terms of accounting, but then in terms of how, who's looking at, who's monitoring, that's something that we would have to look at. Okay, as a follow-up, Tom, she says, what about company performance disclosure at minimum as an obligation of the issuer?
Yeah, so that's a really good point. So we've tried in the rules to sort of balance this. You know, what do we expect from issuers? What in terms of the information that they need to provide, in order to allow investors to make, you know, reasonable decisions about the investment opportunity, but also given various comments we've had today and in previous stakeholder sessions about not wanting to be overburdensome in terms of these small scale companies and what information they would need to provide and what professional support and business support they may need available to be able to do that. So we would expect financials, we'd expect business plans, we'd expect an articulation of the key risks that the business is facing. I think we could maybe look at company performance. I guess with a lot of these firms, with a lot of these businesses, they will be quite new and small and sort of startups, and therefore they may not have a lot of information about their past company performance. We'd expect financials as a minimum, but I don't know, Dr. Leslie, if you want to come in on this, and it's an interesting point.
Companies
You're mute.
who-
Oh, okay.
Companies will be
Sorry.
new, but I think they should have customers and they should have at least
Yeah.
a bit of financials. But I think transparency is really key here. And even if you're a relatively new company, we'd expect you to disclose all you can, financial and otherwise, about that company. You have to basically tell a story. So that would include obviously financials, you know, how you started, where you're going, how do you want to scale, what are your goals, in addition to, of course, the offering and the target, and what activities will be used with that funding. And then on an ongoing basis, at minimum, post-investment, you need to at least provide a report to your investors on how the company is going, whether it's an annual report or, you know, a newsletter or something that shows financials and also basically gives, you know, an idea of the operations on an ongoing basis. I think that's minimum. And I don't think that would be a heavy lift for any company, because remember now, these companies are not informal. They're companies that are registered to do business and are bona fide business concerns. So those are minimum requirements, I believe, for any business.
Thank you. Thanks. We have a follow-up. What would there be, sorry. Can you let us know how a potential collaboration between the ECPCGC and entities will work? We haven't quite worked that out as yet. And, you know, we're looking at possibly right now, what we know is that the ECPCGC is Eastern Caribbean Partial Credit Guarantee Scheme is involved in a project that's funded by the Taiwanese, where they are offering capacity building and, you know, bank loans to companies, to MSMEs in the jurisdiction. So that much we know. And I guess after we meet with them, then we can determine how we can both use our resources to and collaborate to assist those entities. But right now it's a bit premature to say, you know, how we see that collaboration working. Would there be different requirement for startups versus businesses that have been ongoing? Would there be different requirements for startups versus businesses that have been ongoing? When you say different requirements, okay, reporting requirements. Would there be different reporting requirements for startups versus businesses that are already established, I assume?
So the short answer, I think, is no. We've tried to keep these rules as simple and not sort of differentiate between different types of companies that may be offering wanting to raise capital in this way. So no, we haven't. There's same obligations for any company looking to raise capital in this way, because we're trying to be clear. Really, we're trying to make these rules as clear as we can, and as sort of as broad and as wide ranging as we can.
Yes, thanks, Tom. And then the question, what happens to the offer if an investor who has already committed is unable, for whatever reason, to make good with the funds? I think we would have addressed that as part of the discussion earlier, but this is asked in a different way. What happens to the offer if an investor who has already committed is unable, pulls out after their commitment? I think this sort of goes back to what we were discussing earlier, in a sense.
Yeah, I think it does. It's another good point on this, actually. So when is a commitment actually a cast iron guarantee of you getting your funds, and when isn't?
Right.
Yeah.
So thanks for that. We will take that on board and as part of the. Alana, I wish you were able to speak. You have lots of questions today. Following from my previous comments, I believe it is critical to ensure a framework that after the raising of the capital, there isn't a situation where my investment has mysteriously run away or evaporated, whether intentional or unintentional, which is believed is key to ensuring success. Following from my previous, I believe it is critical to ensure a framework that after the raising of capital, there isn't a situation where my investment has mysteriously run away or evaporated, whether intentional or unintentional. There are reporting requirements, I believe, in the rules. So maybe we can look at that, Tom, to sort of, see where there are any gaps and to sort of strengthen, if necessary, what the rules are providing so that we firm up that situation.
Yeah, I think we definitely do need to do that, and I think it's a really interesting and good comment. So thank you very much, Alana, for it. I am conscious of sort of open-ended, ongoing obligations that we may be putting on portals, intermediaries, but there's probably more than we could do, because I mean the current rules stipulate around, as Dr. Leslie said earlier, around that sort of annual reports, reporting financials on an annual basis. But in terms of ongoing oversight, we'll need to have a look at it. But I take your point. Yeah. I am just conscious though that how much are we expecting of an intermediary to be doing this when they've done the due diligence initially, investors have decided to make an investment knowing the risks that may happen with that investment. I think there's a balance there, but I take your point. We'll look at it.
Right, and of course, if all else fails, there's the law, right? The rules are backed by the legislation, and of course, you will face prosecution. If you committed fraud, you will be prosecuted, and certainly the ECSRC will use its powers to the full extent, in relation to that. So it's about investor protection, and we have to maintain that level of confidence in the market. So we will not hesitate. And we have a new law that gives us a lot more enforcement powers than what we have at present. So that is an added, that is a plus as well. Before we go back to the chat, I would let Omar jump in because he has his hand up, and then we'll go back to the chat for the last question that we have there.
Thanks, Alicia. So I mean, Alana raises an excellent point. What I think what's unclear for me, again, what we're trying to achieve is to really provide that mechanism for smaller companies, entrepreneurs, and as Dr. Leslie would have indicated, really try to spur innovation. Right now, the current framework that exists with the ECSRC and the licensees, their continuing reporting obligations. But they have the capacity, they have the resources, they have the technology to allow for that, versus say a small entrepreneur. Let's just use as an example, somebody who's involved in fabrics or creating clothes or handbags or whatnot. They're raising capital in order to drive their business forward with the hopes of one day graduating to maybe a junior market or listing on the ECSC. And do they really have the capacity and the resources available to meet those reporting standards? And I think that's one of the risks you take whenever you get involved in a crowdfunding arrangement. Obviously, there has to be some minimum standards, some minimum reporting requirements. But I don't want us to conflate this crowdfunding modality with a regular exchange. Well, not necessarily conflate, but we need to understand that there is a distinction. And while there has to be protections in place for investors, obviously, we have to be mindful of who the target issuers will be and the limitations that they will possess. and how we bridge that gap. So that's really a concern of mine.
So Omar, I'd ask you the other question. What are the brokers willing to do? How are the brokers willing, the licensed brokers who have the resources, what role are they willing to play? Because at the end of the day, what we're looking at is market development, and the more business there is, it means that your business, the prospects for your business improves as well.
Yeah.
So essentially what we're saying is we're looking at market development not from those big companies that are now sitting on the exchange and nothing is happening, because they don't really need the capital, right? They've just listed. So we're looking at people or the grassroots level that can actually get the market moving and things going. So what are the brokers?
So I mean, currently I can speak for FCIS, so I'm not sure my other colleagues on the call. Generally, we would bring issues to market, and we provide register services, provide trading, and other services. We don't necessarily play a heavy role in the continuing reporting obligations. If that's something that we would be required to, or there would be a desire to have brokers provide those services, definitely something that we can look at, because we do have the resources and the capacity to. But obviously that's going to come at a cost to the issuer, because it's an additional requirement on the broker. So I mean, it's something that we can look at, but that's an engagement, that's a service engagement beyond bringing the issue to market.
But surely you could provide these services at a discount based on volume. I'm just thinking, because I used to be at the Inter-American Development Bank, and we had a project with the junior market, the junior stock exchange in Jamaica, where we were, this is running in tandem with the tax breaks that were provided by the government to basically grow the junior market, have more companies list. And part of that program involved negotiating discounted rates with providers, brokers, accountants, lawyers, to provide discounted services to the small businesses to enable them to list. So perhaps a similar arrangement could work in the ECCU.
It could, but to be frank, I mean, it's a deviation from our current lines of business. And we're talking about a number of companies that be required to provide active monitoring on. Because if as a broker, you're going to be get involved in continuing reporting obligations, you have to be comfortable with what you're reporting, which requires some monitoring on your part. That falls outside the scope of what we do at FCIS. But I mean, like I said, it's something that we could definitely look at if there's a mechanism and a framework in place that would allow for seamless monitoring.
Well, I think there could be partnerships between capacity building providers and brokers, because they're sort of they're complementary activities, in other words. And so I think we have to be creative here and look at what the needs are to build out the ecosystem for this kind of financing. We've touched on a lot of this previously, yesterday and the day before. And I think we're sort of coming to the conclusion that we do need a very extensive capacity building efforts, both on the part for entrepreneurs as well as investors. And I see the brokers playing a key role here alongside, for whether we're going to create a special entity to house all these various activities. But I do see a very key role for brokers in this picture. So I would encourage you to look at this as a business opportunity as well, to really help to build out the ecosystem.
I agree.
Thanks for that question, Omar. It opens quite a few doors here. We have another question. Harmonization is key. Have you thought about different states wanting different iterations of the framework? Well, the whole objective of having the consultations is to receive feedback from across the currency union, from persons who we believe would be integrally involved in the process. So that is why we had the consultations over the 3 days, so that we can receive feedback from across the jurisdiction and of course make changes based on those comments that we've received. I'm not sure, are you referring to iterations, that's Creamoy, iterations from the government aspect or the policymakers? Because we did meet with them as well. So yes, okay, he says policymakers. So we met with the ministries of finance, representatives, sorry, of the ministries of finance in the member countries on Tuesday to present the whole framework, and of course, in a similar vein, to receive feedback from them. So they are involved in the process. And so we expect that whatever the end result is, would be something that is involves or incorporates feedback from all the member countries. So at the end of the day, we have one, as you say, harmonized approach towards to the whole framework. So, okay, so Samantha, would you want to please ask your question? Or is it just to me? Okay, so I haven't heard. Okay. All right, thanks, Sam. She said her comment was covered in Omar's presentation. She was asking whether we were considering setting up an ongoing monitoring body or inviting a business to perform that service for different stages of a business that has raised funds via the platform. Or to put simply, should investors be willing to pay an additional fee to set up such a company to provide these updates and performance assessments to investors? And so that was covered in the earlier discussion. Okay, so we're at the closing point, and okay, so we have questions about any further stakeholder consultations and any follow-ups to the final review. Yes, we are open to having some additional consultations. As I indicated early up in the presentation, we're looking at, targeting persons in the diaspora. So that is one area. We've also had requests from a small business association in one of the member territories to do a program specifically for them. So we will be looking at that. And of course, we encourage you to give us information on any the small business associations in your respective jurisdictions, so that we can contact them directly to perhaps meet with them on the projects as well. So we are looking at, and most likely would want to say yes, that we will be looking at doing some more of these sessions. And thank you, Mr. Thomas. We will be contacting you to assist us with the diaspora, in the diaspora as well. Mr. Thomas is asking, based on the feedback received and any adjustments made, will there be a follow-up consultation to review or look at the final documents? Dr. Leslie, Tom, what say you?
Yes, I think so. I think any and all feedback is really useful, right? And that's what we're trying to do here. If we need a further stage, then I'm definitely very keen on doing that, because we want to make this the best framework we can, and we want to get it right. So the more people that can help us do that, the better. So yeah, I'll be very, very happy to do that.
Yeah, likewise. I think the success or failure of this project stands on buy-in, and so at the end of the day, we need to get some rules in place that everyone is comfortable with. So we're striking the balance between sufficiently rigorous to build confidence in the system on the part of all players, but also not overly burdensome that you don't get takers to the platform. So absolutely, yes, we're open to having a final review once we incorporate all the the thoughts and issues that were raised.
Okay, so there are no more comments in the chat. I don't see any other hands up. I have to say thank you very much to this group. We've had, you know, it's really remarkable that we've had 3 different groups, and on each day we would have gotten, you know, feedback, different types of feedback. So this has been very, very useful for us. And we want to thank everybody for their participation, and of course to our consultants who have been so expertly fielding your questions and your comments. We will be back in touch with you should we as soon as we finalize the dates for any further consultations that we have. And so we want to say again, thank you very, very much for your feedback, and we look forward to working with you to implementing this very worthwhile and, as Dr. Leslie says, game-changing project for the region. So once again, thank you very much for your participation, and please continue to look at visit, I should say, our Facebook page, our social media pages, as well as the website for any updates that we will be posting there in relation to the project. So thank you very much for your attention, and I wish everybody a good lunch and a good afternoon. Thank you.